So how does an index work? What is an index? Who creates indexes? Why should I invest in indexes? All these questions are very crucial if we want to invest our money responsibly. And so in this video we are going to answer all these questions. But stick around till the end, because at the end of the video I'm going to tell you how you can invest in indexes. Hey, it's Dario and this is Divity Trading, a platform where we can share our best tips and tools when it comes to trading, investing or finance in general. And if you love the subject, please consider subscribing. You know, indices are one of the most important things when it comes to investing. They are very useful in order to keep track of a certain market or of a certain group, but also they are very important to compare the investors' performances with the market of reference. As I said in previous videos when we talked about the ways to invest our money, we talked about the fact that if you want to invest in an investment fund, you should compare the investment fund return with the index of reference. That's so that it's possible to compare the performances of the two and see if the investment fund did better, which should be its job, or worse than the market. And for retail investors it's the same. Retail investors and also professional investors should make the same thing. They should compare their returns, their profits with the market. If the market went down at 10% and the index went down at 20%, that's good. You did better than the market. So that's mainly how they are used. But also they are used to invest. But how you can invest? Well, first we need to understand what indices are and how they are created. But hey, before we start, if you enjoyed the video, please leave it a like and let me know in the comments down below if you already use index in order to invest or you prefer single stocks. So you can think about an index as a giant pool or a basket of components. There are many things in an index. There could be an index for currencies, there could be an index for stocks, there could be an index for commodities, and etc. So again, a giant pool containing various assets normally related to each other. Why is that? Because an index job is to keep track of a large group of things but with a smaller group. So in this video we are going to talk about stock indices. So for example, you want to keep track of the US market. Well, you are going to take a portion of the US market which best represents the whole market. So you take certain stocks that you think represent as best as possible the whole market, so the general market. One of the most famous indices is of course the S&P 500, and the S&P 500 is composed by the 500 companies which have the biggest market cap. So because they have the biggest market cap, these companies transfer the most money in the stock market. So again, the concept of indexes is to keep track of a larger group with a smaller group. But who decides which larger group to keep track of? And also who decides which smaller group can best represent the larger group? Well, of course, companies that choose to do it. So we have the Nasdaq, the S&P 500, we have the Dow Jones, we have the stocks for Europe, and so on. So these companies decide which stocks to pick in order to represent the larger group. And also they weight the stock in order to best represent, again, the larger group. So again, for example, we have the Dow Jones US market, we have the Dow Jones Industrial Average, we have the S&P 500, we have the Nasdaq 100, we have the Stocks 600, and so on. These are all indexes that want to represent a larger group of the market, a larger section of the market, but using a smaller group. But why should I care about indices? Well, indices are a very good way or form of investment. That's because with an index you can follow many other stocks and you can actually follow a whole market, a whole section of the market. So for example, if you would like to follow the healthcare sector but you don't have the money in order to buy all the healthcare stocks out there, you can follow or you can buy the Dow Jones Healthcare Index. But actually, you cannot buy the Dow Jones Healthcare Index. But so Dario, why you're telling me you can buy indexes but then you tell me you cannot? Well, because you don't actually buy the index, you buy something else that follows the index, that replicates the index. And what is that thing that replicates an index? Well, It's an ETF, and we talked about ETFs in previous videos. I will put the video in the I icon up here or in the description. So again, with ETFs, you can actually buy the whole index basically, okay? Let's keep it simple. So the ETF's job is to replicate the index, and you buying the ETF means that you actually buy the index and you will follow the index. If the index goes up 10%, you will go up around 10%. If the index goes down 20%, you go down around 20%. And this is very good because you can actually diversify it with less money, because you will need so much money to buy those companies that compose the S&P 500, for example. Instead, you can buy an ETF that replicates the underlying asset, so the S&P 500. You can actually diversify in all those 500 companies. But why should you care about diversifying? Well, it's very simple. If one stock goes down 20%, it's more probable that there is another stock going up 50% maybe. So actually you can compensate the losses and lower the volatility and the risk. And that's always good when we talk about investments. So this was all for indices. Again, the main concept here to understand if the index follows a larger group but with a smaller group. And you can have indexes for currencies, you can have indexes for commodities, you can have indexes for certain sectors of the stock market, you can have indexes for the whole stock market, you can have indexes for a US market, for a European market, for a global market, etc, etc, and etc. I will put a list in the description, so just go down in the description and you can have a look at all the indexes of the sectors of the US stock market. Just have a look at it, familiarize with it, and if you have questions, go down in the comments and put your question. But hey, this was all I had to say for indexes, and if you enjoyed the video, please leave it a like and let me know in the comments down below if you already use indexes to invest or you prefer single stocks. And I'll see you in the next video. You know, one of the most effective ways to make money if you want to build a mobile game or even a desktop game is through the so-called microtransactions. Small transactions that people make spontaneously. You make them play the game for free, but then you put in small transactions that